Here we have the 30-minute price chart for GameStop Corporation, stock ticker GME. As we can see here, overall, I would say that we had a very strong week last week for this stock. I think that some people are getting a bit, impatient, possibly, maybe waiting for a quick, massive run higher. But I think that a lot of these expectations are being, generated or stoked by these random YouTube videos that are kind of calling for strange projections here. Massive upward price moves on a certain date that really aren't likely to happen. Overall, I do feel that there's a lot more to be encouraged about in this chart than not. I think that there are plenty of positive signals here that should be focused on. And really all that we need to see at this point is a consistent base that's being formed here, and for the upside price levels to continue to moving backward or higher, because ultimately this forces the short sellers to continue taking steps back, and sort of redefine their plans for where they're likely to start attacking the market. I mean, to me, this is really the best way of looking at it. It's not, are we going to see a massive explosion in share prices? What I would personally rather see here is a strong base being formed, and then higher and higher resistance levels being created, making it much more difficult for short sellers to establish their positions. So, what I'm really looking at here is sort of a series of waves higher. First we have this initial wave higher, which really started at the beginning of this month. I would say June 1st. July 1st. Which month is this? July 1st, where we saw lows here of 22.32. We did see kind of an initial wave higher here, and then a sideways period of consolidation. You can see this area here. It's sort of a sideways price zone. There's a range high and a range low. And then prices were sort of oscillating around the exponential moving average cluster. That's these colorful lines here. And then, we sort of formed a base here, and then we were able to make another run higher. This is the type of activity that I would prefer to see. Seeing a short-term price spike, I don't know how many people are really going to benefit from something like that. I mean, if you do have a profit target order in place, a take profit order in place, and then there is a massive spike, and then that order gets triggered, yeah, that might be perfectly fine. But I don't think most people have that type of order in the market. I mean, you might have a stop loss in the market, but I think a very small percentage of people have profit targets in place, because you'd rather let the profits run rather than just sort of take profits quickly. So these massive price spikes that are discussed by some of the other people on YouTube, I just don't see that as being a realistic outcome here, at least not near term. I think we need to see more of a base build here, because we have to remember, we have to go back here even just a short period of time to see that there have been a lot of declines here relatively recently. We were trading at, if we go back to the middle of June, we were trading well above the $30 mark. 33.70 is the high from June 12th. So mostly what we've seen in the period since then has been a period of decline, after sort of the roaring kitty disappointment, video or whatever that was. So what we're trying to do here mostly is to just form a base. We're not really trying to um, see excessive price moves that aren't really sustainable. That might be short term in nature. That cause a brief period of profit taking, and then prices just quickly kind of retraced back to where they were. Here, what I'm looking at is a series of prior highs, a series of trend waves here, and a series of bases that are being formed at higher and higher levels. Ultimately, in my opinion, what this means is that it's becoming more and more difficult for short sellers to establish their positions. So, for a large portion of the week last week, the market as a whole was trading under pressure. If you look at the Thursday trading session, Nvidia was trading under massive selling pressure. Apple was getting sold off. Meta platforms, Facebook, massive declines in that stock, and the stock dropped through major support levels and never recovered most of those losses. This did not occur here with GameStop. So what is the explanation for that? I mean, why do you think that's true? I would like to know why people think that is true. Why do you think that most of the market sold off toward the end of last week and GameStop did not? I mean, we can see the upward trajectory here. It's higher. We're moving higher in waves. We're forming bases and moving high. The stock is moving higher and higher at better levels. So, what would be the explanation there? I mean, why do you think that Apple, and Nvidia and Microsoft, like, why are these stocks selling off massively, but GameStop isn't? I mean, what is the explanation there? So, we really just have to kind of acknowledge what is actually going on in the price charts. Not look for positive stories that aren't really there. Make these bizarre associations. I mean, I recently did a video on AMC where another YouTuber was talking about how a collapse in Bitcoin is what preceded the last short squeeze in AMC. It's completely ridiculous. These things have nothing to do with each other. There have been many declines in Bitcoin that didn't result in a short squeeze in AMC. He might be, even if it is true one time, there are many other times where it would not be true. So, these kind of random connections that people are making don't make a lot of sense. I mean, they're just not true. I don't know why, I don't know why people would pay any attention to any of that. The only thing that you need to be paying attention to is the chart action itself. And as we can see here, the series of higher highs that are being generated, all this has done is made it much harder on short sellers, and the stock has managed to hold up in the face of pretty massive sell-offs in the market as a whole. Last Thursday, we saw major declines in the S&P 500, in the Nasdaq, in the Dow, in Nvidia, in Apple, and Microsoft. So this did not occur here. I mean, that's just not occurring in this chart. We did see a little bit of a price decline here, but this is nothing compared to what. Look at the Facebook chart. Look at the Meta Platforms chart. I've got a recent video that's posted on that. Those are massive declines. That is a huge amount of market cap that's just being shed and just deteriorating and just being lost, evaporating into thin air. And that's not happening here. Ultimately, what did we really see from the price highs here? The price highs are coming in at 26.45, and then the price lows come in at roughly we can call this 24.93. So we did see a brief dip below the $25 mark, but you're talking about a couple. You're talking you're only talking about a couple of dollars here. I mean, this is nothing, in percentage terms. This is nothing compared to what was being seen in the mega cap stocks. And those are supposed to be the stable companies. Like, what is going on here? Why would GameStop be more stable than Apple and Meta Platforms? That's in the Mag 7. That's a huge company. So, these are the reasons that, there is reason, there is, a reason for optimism in the coming week. I would not be real concerned here until I did see a break back below this 25.10 level. If we did see that happen, we would be losing some historical support zones, and we would be falling back below the moving average cluster. And then also we would probably be losing this upward trend momentum in the relative strength index if all of that were to occur. So currently, I would watch this 25.10 level to the downside, and see if prices bounce from there, or see if we see a break from there at all. That would be my main price zone to watch for this stock. So here's the current market analysis for GameStop Corporation, stock ticker GME.